Interest rates are poised to rise as the Federal Reserve begins to raise benchmark interest rates. Why are they doing this? And more importantly, what does it mean to you? I'll explain each of these in this video. To understand why the Federal Reserve, the nation's central bank, is going to start raising interest rates, it's important to go back to why they cut interest rates to these levels back in 2020. At the onset of the pandemic, the economy was in severe danger as things were shutting down and we were all going home and staying there. The Federal Reserve cut their benchmark Fed funds rate to near zero levels to spur borrowing, investing, and the type of activity that would be needed to pull the economy out of the hole. And in large part, it worked. Unemployment, which had peaked at 14% in 2020, is now at 4%. And the economy recovered all of the ground lost during the early stages of the pandemic. Not only did demand and the overall economy rebound very sharply, but so too has inflation. This is why the Fed now has to start pumping the brakes on the economy. In short, they will raise the cost of money in an effort to temper demand and ease inflation pressures while maintaining the economic expansion. Rising interest rates will touch consumers in various ways. Let's start with borrowing costs. Mortgage rates have already climbed from the record lows of 2020 and 2021 back to levels seen in 2019 prior to the pandemic. This has added another layer of affordability issues on top of surging home prices for prospective homebuyers. Interest rates for other products will see increases too. New and used auto loans will see higher rates as the year unfolds, though just moderate increases. The increases will be more pronounced on variable rate debts, such as credit cards, home equity lines of credit, and any private student loans that carry variable interest rates. Every time the Fed raises the Fed funds rate, you'll see that higher rate filter through to your credit card, home equity line, or other variable rate debt fairly quickly, often within 1 to 2 statement cycles. For savers, the news will get better, but slowly. As interest rates rise, it'll be very important where you have your money parked because many banks, and especially big banks, will not be passing along those higher rates to savers. The banks that are already offering competitive rates will be those most likely to remain competitive and pass along higher rates to savers over time. Check out the Bankrate.com search engine for the top yielding savings accounts and certificates of deposit. But this will be a long road back. The past 2.5 years have seen savings rates falling and now inflation rising. It will take a number of interest rate hikes to get savings returns back up to the 2% neighborhood, just as it will take a number of interest rate hikes to get inflation down to the 2% neighborhood. At least things will be moving in the right direction. There are other impacts we'll feel as interest rates and the cost of money increase. Asset prices that have been lifted by low rates and a lot of money sloshing around, such as stocks, real estate, and even things like cryptocurrency and NFTs, will come under varying degrees of pressure as rates rise and safer alternatives like savings accounts and high-quality bonds become more attractive. Your 401k balance probably won't increase every time you check it like was the case last year. Higher rates, high home prices, and more would-be buyers being priced out of the market may temper home demand enough to temper the pace of price increases. The tightrope the Federal Reserve has to walk over the next 1 to 2 years is to raise interest rates enough to tame inflation without snuffing out the economic expansion. Only time will tell whether or not they're successful, but the things we do know are that it will cost more to borrow, savings rates will get a little better but still trail inflation for a while, and that a return to volatility in the prices of riskier assets will be part of the journey. Be sure to check out Bankrate for all the latest content regarding how rising interest rates will impact your finances and for the most current and competitive terms for whatever financial product you're seeking. I hope this video was helpful, and thank you for using Bankrate.